Please help this channel grow by hitting like and subscribe.
For years, the Chinese EV maker NIO has felt like this high-stakes bet on the future. But what if that bet is finally about to pay off? We're talking about a single moment that could completely redefine the company. So is this it? Is this the moment NIO finally turns the corner? Let's break it all down. Right now, pretty much everyone, from investors to rivals, is watching and waiting for one specific thing. After years of burning through billions to build its brand and its tech, the big question is still out there. Is NIO's whole business model actually sustainable? Well, we might have a date when we finally get an answer. Okay, so get this. March 10th, 2026. Now, this is a hypothetical date, of course, but it represents the moment that a lot of analysts are projecting NIO could finally cross over from red to black and report its first ever quarterly profit. And let's be super clear here. This isn't just about one good quarter. This is about potentially validating their entire high-cost, high-innovation strategy. So how did we even get to this point? Well, let's dig into the momentum that's been building up to this potential tipping point. And it all starts with the most basic question for any car company, right? Are they actually selling cars? Okay, so let's imagine we've fast-forwarded to our hypothetical February of 2026. NIO has just delivered this many vehicles. That number, it represents a pretty remarkable 57.6% jump from the same time last year. Yeah, there was a little dip from January, but honestly, that's totally expected. You've got the huge Chinese Spring Festival holiday right in there. The real story is that powerful growth trend. But here's where it gets really interesting, seeing where this actually puts NIO in the whole pecking order. They're sitting in a really solid second place among their startup peers. They're ahead of XPeng, but still trailing Li Auto. So this shows they are a serious contender, not just some niche player. But, as always, context is everything, and the EV landscape has a true giant. And then there's BYD. Look, this isn't just another competitor. This is a force of nature, operating on a totally different planet, scale-wise. Seeing this number really drives home why profitability is the holy grail for a company like NIO. It's not just about making money, it's about proving you can build a sustainable fortress in a market that is absolutely dominated by a titan. And this quote, man, it just nails the stakes perfectly. Because if NIO does report a profit on that hypothetical March 10th, it fundamentally rewrites their entire story for investors. They'd literally transform from a cash-burning story stock into a business that can actually stand on its own 2 feet, cementing their place as a survivor in these brutal EV wars. But look, this potential profit party, it's not just happening by accident. It's the payoff from years and years of multi-billion-dollar investments into building what you'd call a technological moat around the business. So let's break down the 2 main pillars of that defense. All right, first up, there's self-driving technology. NIO has poured a ton of resources into its in-house subsidiary, GeniTech, developing everything from the silicon all the way to the software. And that massive bet, well, it just got a huge vote of confidence. 2.257 billion Chinese yuan. That's a huge chunk of cash that outside investors just pumped directly into GeniTech. This is massive because it validates the tech as having real standalone value. It's a super smart move, right? Funding your cutting-edge R&D without draining the parent company's bank account, all while NIO gets to keep a controlling stake. Okay, so beyond the fancy software, NIO has this huge physical moat, something that is just incredibly hard for anyone else to copy. And I'm talking about their signature battery swap network. So instead of waiting around to charge, drivers can just pull into a station and get a fresh, fully charged battery swapped in automatically in just a few minutes. And the scale here, it's just staggering. The NIO network recently hit a world-first milestone, its 100 millionth battery swap. This isn't just some gimmick. With over 3,700 stations, it's a mature, established ecosystem that drives incredible customer loyalty. It really is a core part of the whole NIO experience. Okay, so a strong defense is great, but it's not enough to win, right? NIO is also on the attack. They are aggressively expanding their market reach with a pretty clever multi-brand strategy, and it's designed to capture a much wider slice of the pie. So what they're doing is pretty smart. They're basically fighting a war on 3 different fronts. You've got the core NIO brand for the premium market, then there's Envo, which is their new play for that mass market, value-oriented segment. And finally, you've got the Firefly brand, which is targeting the affordable urban EV space. It's a classic strategy, really, just executed for the EV era. And this isn't just about China. This whole strategy really shines a light on their global ambitions. By targeting its first ever right-hand drive markets, we're talking the UK and Thailand, with their affordable Firefly brand, NIO is making a really strategic move to find new growth and de-risk from the hyper-competitive Chinese market. But of course, no company exists in a bubble. The success of this entire strategy really hinges on navigating a complex and, let's face it, constantly shifting policy landscape, both at home in China and abroad. So let's break down the push and pull of all this policy stuff. On one hand, you have the headwinds. China just brought in a 5% purchase tax on EVs, subsidies are getting a little less certain, and the US market? Well, it's basically walled off with 100% tariffs. But on the other hand, the tailwinds are powerful. The EU is still a key market. EVs still have tax advantages over gasoline cars in China, and maybe most importantly, Beijing's new champion policy seems to favor homegrown tech leaders like NIO. That could lead to some unseen advantages down the line. All right, so when you put all these pieces on the chessboard, the push for profit, the tech moat, the brand expansion, all those policy risks, what do the big players on Wall Street actually think about NIO's future? Well, the vibe from the major analysts has actually been getting more and more positive. Let's take a quick look. You got Morgan Stanley, for instance, holding firm with an overweight rating. Their $9 price target suggests they see pretty significant upside from the stock's recent price of around $487. Then you've got Goldman Sachs. They've also signaled they're feeling more confident, recently bumping their own price target up to $7. And just to round things out, UBS jumped in, upgrading the stock to a buy with an $850 target. Now, the key thing here isn't just the specific numbers, but the direction, the trend. You're seeing a growing consensus among these major banks that, hey, maybe this company really is at a turning point. So when you boil it all down, what you're looking at is a classic high-risk, high-reward situation. It's really that simple. The bull case is super compelling. Profitability seems like it's within reach. Their core tech is now validated by outsiders. That swap network is a powerful moat, and global expansion is kicking off. But the risks, they are just as real. The competition is absolutely brutal. Policy can shift overnight, and they have to execute flawlessly. So you've got all these things coming together at once. The money, the tech, the politics. And it makes NIO one of the most fascinating stories in the entire auto industry right now. The path is laid out, the pieces are in place. But the ultimate question remains, will the company make that turn to a profitable future, or will it become another casualty of the EV wars? That hypothetical March 10th date, well, that represents the moment we could get our very first real answer.
The content in this video is for entertainment and educational purposes only and should not be considered financial advice. All investments involve risk, including the loss of principal. Please do your own research or consult with a professional before making any financial decisions.